After an auditor has decided to accept a new client or continue with an existing client, the auditor needs to formalize that relation through something called an engagement letter. The engagement letter is going to spell out exactly what are the responsibilities of the auditor and what are management's responsibilities as well. For example, we talk about the engagement objectives, which is to perform an audit. That's what the auditor is doing. But management would take responsibility and it would say management's responsibility is the financial statements. It's not the auditor's responsibility. The auditor is going to conduct tests in an attempt to determine with reasonable level of assurance whether the financial statements are free from material misstatement, whether due to error or due to fraud. So that's what the auditor is going to do. But ultimately, the financial statements are management's responsibility, and that's going to be spelled out in the engagement letter. Then also the engagement letter is going to talk about any limitations. For example, as I said, we are not guaranteeing as the auditor, let's say we're the auditor of General Electric, we are not guaranteeing, we're not providing absolute assurance that General Electric's financial statements are fine and don't have material misstatements. We acknowledge the possibility that even though we're sampling different transactions and we're attempting to do these tests to ascertain whether management is being truthful about the financial statements and whether there's material misstatements, we are not guaranteeing. We're saying, look, up front, we are not providing any absolute assurance. We're providing reasonable level of assurance. And then if the auditor, so let's say we're the auditor and we're going to provide some additional services to General Electric, like for example, some tax services or something like that, then we would also spell that out in the engagement letter and say, okay, this is what we plan to do.